what I realized, especially in venture, is you're not really here to make friends. I mean, the friends are great, but that doesn't really translate to good returns. What translates to good returns is everybody believing you're dumb or wrong, and then you end up being right, which is very hard because I think naturally everybody wants to be liked, especially when you're new into the game or haven't earned your stripes, so to speak. And I think for me, the biggest part of that was just being a little bit more comfortable with your own skin.
You and Frictionless have built a lot more conviction around the DePIN sector. I remember we talked at coffee about a year ago, and it was like a newer term trend that was circulating in crypto. Recently, over the last maybe 6 months in this bull cycle, it's really picked up steam as a narrative, and number of projects getting funded, number of projects getting launched. What are your hopes for the DePIN sector, and where do you see it going now that you've built more conviction around the idea? You were one of the loudest, earliest supporters of Solana through the bear market. I remember getting coffee in Miami, and your level of conviction was very, very high. And you explained it all, and I think it made a lot of sense. But what gave you that level of conviction even through the brutal bear market, Solana at sub $10? And what was it like telling the rest of crypto, like, hey, you're wrong on this? Like, I think I'm right, and this is why.
I think the latter part of that was probably the hardest.
Yeah.
What I realized, especially in venture, is you're not really here to make friends. I mean, the friends are great, but that doesn't really translate to good returns.
Mm-hmm.
What translates to good returns is everybody believing you're dumb or wrong, and then you end up being right, which is very hard because I think naturally everybody wants to be liked, especially when you're new into the game or haven't earned your stripes, so to speak. And I think for me, the biggest part of that was just being a little bit more comfortable with your own skin. And if you've done the homework, you've done the homework, and believe in yourself, I think has been one of the biggest learning lessons of that. But I think the big thing that gave me confidence was really my time at Tesla and understanding physics is kind of law. Everything else is a recommendation. And the more that I kind of dug into the architecture designs of different blockchains, what I realized is you can't really eliminate the pieces of kind of high throughput and high data propagation, high compute. You can kind of move the compute to a layer 2 or a layer 3, or you can move the data propagation from the layer 1 to an alternative data layer, or even do like interesting tricks like data compression. But at the end of the day, what really matters is can you actually scale applications? And for me, when I started doing more and more homework on this, unearthing these different components of blockchains and just realizing, hey, you can't fight physics. You can either integrate them or separate them. That's fine. But at the end of the day, there are going to be requirements. It was painful when Solana had all this FUD, but I think eventually we knew a design like Solana was going to win long term, just because to have applications at meaningful scale, you had to have the components that Solana had. And so I think when it dropped 98, 99%, whatever it did, we didn't really lose conviction because it had the ingredients that we thought were requirements.
Right. Yeah. You knew when capital and users and applications came back to the space, Solana would be set up kind of architecturally in a way that would be able to handle all that and would be able to benefit from the kind of upswing in interest and application usage.
We thought it was the most simplistic. It's kind of dumb, in my opinion. I like dumb things. I think oftentimes we like to complicate things, especially in the VC landscape, to sound smart. And more so than anything, what I've realized is the dumber things are, the more I appreciate them because they're more simplistic. And Solana is kind of unapologetic about, hey, we're going to raise hardware requirements. We're going to have faster internet speeds to do more throughput. And then we're going to parallelize this and add essentially more compute over time and more bandwidth over time as we scale. And I've always kind of appreciated the dumb simplicity of that because the less moving parts you kind of have, the less things that can kind of break. And it was just clever engineering in my mind.
For sure. Yeah. You've got your own crypto podcast. We've talked about it, many times. You've given me camera recommendations. It's been fantastic. So, what was the motivation for you to start that podcast, and how has it benefited both you and Frictionless, your fund?
I think for me with the podcast, I felt like I did a lot of homework just on crypto, and I didn't get invited to parties, and honestly just wanted to chat with more interesting people. And the podcast was ultimately the manifestation of that. I think for me, the podcast was even predates the fund.
Yeah.
I started the podcast before I knew I was going to do Frictionless, and I just thought it was an interesting way to chat with founders and builders. And I think for me, more than anything, it's kind of been a sounding board and really allows you to have conversations that you probably wouldn't have had otherwise, which is kind of a superpower. And the biggest thing that I've really learned from the podcast was trying to get better at asking better questions to help people tell their stories. And I think what I've tried to hone in through kind of my 140-ish podcasts is every time asking better and better questions to allow founders to tell their story, which ultimately translates into them just kind of being happy about someone understanding them, which has kind of been the cool superpower. But to answer your question, more so than anything, it's just been cool to use as a sounding board and have entrepreneurs tell their stories.
100%. Yeah. It's definitely a way to kind of speed run building a brand and a reputation. I feel like I was talking with, I think, Cheyenne about just like how to break into crypto VC even, right? And it's like, when you don't have anything going for yourself initially and you're trying to make a name for yourself, if you have a platform with distribution where you can have founders on and help them tell their stories, I think they really appreciate that, and it just builds out your network very quickly.
It's one of the kind of biggest alphas I think out there, that and writing. The podcast kind of helps get your name out there, but it's really an avenue for other people to tell their story, the guests. But with writing, you can really put your own thoughts and own that and get similar levels of distribution. And so I think for Frictionless, we kind of started by the podcast by happenstance. But one thing that we want to improve upon, and we will, is the writing aspect. Just owning our own voice, because I think we have lots of spicy opinions, and historically we've been semi-decent at doing that, but we can do a lot better.
Over the last maybe 12 months, I feel like you and Frictionless have built a lot more conviction around the DePIN sector. I remember we talked at coffee about a year ago, and it was like a newer trend that was circulating in crypto. Recently, over the last maybe 6 months in this bull cycle, it's really picked up steam as a narrative, and number of projects getting funded, number of projects getting launched, just at all. So what are your hopes for the DePIN sector, and where do you see it going now that you've built more conviction around the idea?
I think for me, the reason why we did so much homework on the infrastructure was so that engineers could build applications at scale. And to me, that was always kind of a prerequisite before applications could be built, because what I saw happen on Ethereum, and even in some instances on layer 2s because of the fragmentations and the issues that were arising there, were just that if applications started to achieve some amount of product market fit, you would suffer from anti-network effects because gas fees would get super high, and you did all this work, but the underlying infrastructure didn't support it. And so I think we kind of got to the end of the road on that. And I kind of came up for a breath of fresh air after raising the fund and everything, and started looking around. And I really liked the product focus of DePIN. You could squint and say, all right, if you buy these dash cams with HiveMapper, I can see how the number of miles would start to compound at a fairly high growth rate compared to a Palo Alto engineer that's paid a couple $100,000 a year to drive a $500,000 car around the world. And so my background is in product. And so I really just wanted to see products that had some real use cases. I mean, trading has been great. It's interesting, but I kind of want that to evolve. And when I looked around, it just seemed like the decentralized physical infrastructure network had the best shot of doing that using blockchains as the backend for coordination methods.
100%. Well, yeah, that's all I had for you today, but thanks for coming on, man.
Appreciate it. Thank you.
Appreciate it.
Come to Miami.
Come to Miami.
Thanks for listening to the Proof of Coverage podcast. We post new episodes Mondays and Wednesdays, interviewing the best DePIN and crypto founders out there. If you like this episode, follow us on Twitter @CoverageProved and all other platforms, including YouTube and Spotify, at Proof of Coverage Podcast. Thank you.